Welcome to a Now Explain Rough Cut video. This video is part of our manual bookkeeping series. You can find related videos on our YouTube channel or search the internet for a Now Explain Rough Cut. So now, let's get explaining. Purchase Credit Note Daybook with detailed analysis. What it is and why we need this daybook. Related daybooks: the Purchase Invoice Daybook, the Bank Payments Daybook. Similar and related terms used: suppliers, creditors, accounts payable, vendor, they're interchangeable. Payments, money out, electronic funds transfer, EFT, checks, terms you'll hear used. Manual bookkeeping: this is all pen and paper bookkeeping. Using daybooks, the books of original entry, also known as first entry or prime entry daybooks. We are collecting information from the source documents. What is a daybook? A daybook is a list of your transactions, invoices, payments written down in sequence in a book. In days of old, this was done daily. Each day, sales were written into a book, so we get the term daybook. A daybook imagined by you. What a modern daybook looks like. A big red book. Often these modern daybooks are referred to as big red books. Why big red book? Because some of these red books can be very big. Why are they big? Depending on how many columns you need. More columns, bigger book. Maybe this big. This book has 30 analysis columns, and the columns will be very narrow. So here we are inside an empty Purchase Credit Note Daybook. And here's an example of a Purchase Credit Note Daybook with expenditure analysis. So each of the columns has some analysis title in it, such as electricity, telephone, stationery, advertising, cleaning. So example 1, cost of sales credit note. Let us see how this Purchase Credit Note is recorded in our Purchase Credit Note Daybook. Here's where our Purchase Credit Note details are recorded. Here is the Purchase Credit Note with the Daybook entries side by side. You can see the information taken from the Purchase Credit Note. There's the supplier, the total value of the invoice, our reference number for this credit note, the net amount for the cost of sales because it's red blocks that we resell, the date of the credit note, and here's the VAT analysis of the credit note. So let's explain the Purchase Credit Note Daybook columns. The date of the Purchase Credit Note, the supplier, the name of supplier who provided us with the service or item, reference number, the index number given to the invoice by us internally so that it can be tracked. This is not the supplier's invoice number. Yes, all these details should be on a Purchase Credit Note. The next three columns: total VAT net at 20%, the total value of the credit that the supplier is refunding to you including VAT, the amount of VAT contained in the total value of the Purchase Credit Note, net at 20%, the value of the items before any VAT was charged at the VAT rate of 20%. There may be more than one VAT rate charged on an invoice or a credit note. Yes, this information should be on a Purchase Credit Note. Totaling the columns. Each column that contains values must be totaled. By totaling each column, this allows us to see what the total purchase credits are for the day, week, month. In this example, we are seeing the monthly purchase credit figure. This Purchase Credit Note Daybook lists the one Purchase Credit Note for the month of January. Why can't we just have a total column? Because the total of the VAT column will be used in the calculation of your VAT return. The total of the net column is where your purchase credits, how much you were credited for in the month of January, is recorded. VAT and net are needed for you and your business. The Purchase Credit Note Daybook allows us to analyse what we got credits for. So we can have many different analysis columns. Analysis columns. We have analysis columns to allow us to analyse what we got credit for, returned. In this example, cost of sales, items that we resell and are returning, excluding VAT. So the cost of sales is shown here as €37.50. Expenses, overheads to run the business, excluding VAT. We can have columns, electricity, telephone, advertising, cleaning, and more. Cross-check the recorded values. The analysis column values are all recorded excluding VAT. They are the analysis of the net amount of a purchase invoice. The total of all the analysis columns must equal the net of 20% column. The cross-check formula must be true. Cost of sales plus electricity plus telephone plus stationery plus advertising plus cleaning equals the net at 20%. The total value column is made up of the net value, amount excluding VAT, plus the VAT amount calculated on the purchase invoice or credit note. Cross-check formula must be true. VAT plus net at 20% equals total. If the cross-check formula does not agree in either case, then there is an error in the values recorded and that error must be found. Analysing multiple VAT rates. It is possible that you buy items at different VAT rates. If the VAT rates of 20%, 10% and 10% were our VAT rates, how do we analyse the VAT? Similar to analysing purchases, we can also analyse VAT. How? We can add more analysis columns. In the example that follows, we have added a new expense, workwear, that has a VAT rate of 10%. We will add a new purchase analysis column, workwear, and a new net of 10% VAT analysis column. Here are additional net at and workwear analysis columns. You should have a net at column for each possible VAT rate. And that's how you set up a Purchase Credit Note Daybook, and why this Purchase Credit Note Daybook is set up as shown using these columns: the date, the supplier, the reference number, the total credits, VAT on credits, and the net credits with analysis columns. More columns can be added to provide more analysis of VAT and of what is credited. Thank you for watching.